Hello, everyone. How we doing tonight? A little bit of a weird one. I just came running back from the airport, so I'm still getting set up here. Give me a second. I'm doing great, thank you. Finally starting to get over the hill. I don't know if you guys know, but when you're sick, well, if you guys understand, but when you're sick, at least when I'm sick, I have that first curve of it feels like shit, and then you get over that hill where it starts feeling better. I'm finally there. So, now that I feel a little bit better, starting to feel a lot better, I am very happy. Very, very happy. I'm muted. Wow. How am I muted? I am not muted. Alex, unmute me and you'll find it directly. So just okay. Thank you, Fleech. I don't know if I've seen you in here before. I heard a bit. Yes. So if you hear the echo, just mute the stream. So I do need to fix that, and I need to find a good virtual camera software. That's how I'll be fixing that. But for now, I have not. So you need to mute the stream directly so that you only hear my voice. So basically, just go on the stream, right? We're in the stage. Just go on the screen. I think you can right click and mute it. If not, it's probably going to be bottom right, a little sound icon. Another icon than that. That is you requesting to speak. Did you find it? If not, I'll just hop on my second account and actually show you where it is. Just so we can fix that. I'm seeing, I think I can bring my camera up a little bit. So you guys can see me perhaps a little bit better. But I am going to fix that, Fleech. Glad to have you with us. You're on phone. How can I fix this? How can I fix this? Let's try something very quickly. Okay, that's not going to change shit. Because it really is pissing me off because I looked for good virtual camera software and couldn't find one. Yeah, no. So when I'm sharing my camera, it's asking to share sound. But if he's on phone, might be a little different. So if you're on phone, you're better off just muting me instead. So instead of muting the stream, just muting me, so you can go on where you see my profile picture. I am gonna fix that for you guys. Definitely will. Glad it worked for tonight at least, Fleech. Glad to have you with us here. Some more recent faces. Lovely to see. But yes, I do need to find a good virtual camera software that will allow me to share a virtual camera, which means I can share you guys one screen and you can see my camera and my trading view without it being so shit. And that's the truth, right? So definitely going to be working on that. But for now, we'll just start by reviewing the day, right? Monday, we had a huge down day. And anytime we have a large range day, what do I look for on the next day? It's always the same. Nothing new here. I look for a retracement. So I expect a small range day with a retracement, and small range compared to the previous range of almost 800, almost 900 points. So 500 points was a little bit higher than anticipated for me, but still in the direction that I was looking for. We got upside, and you also had downside opportunities, of course, to previous day low, which is a clear objective, and we did not reach our objective low, or our next liquidity point if you want. But if we look at ES right here, we did reach it. So that forms SMT. We did not reach Friday, September 6th lows, but we did reach this point, which formed SMT. And that's the framework we're going to be basing on, right? Looking for longs after a large range down day. I'm looking for retracements higher. And once this level is met right here in the PM, then you have an opportunity to go long. But that's very late. Do we have any other opportunities to look for a trade before then? Yes, of course. You could look for shorts. You could look for longs. Personally, what I was looking for is the power of 3 was already completed. So I'm going to remove this red line. And this is a little bit too intense for me. Having a hard time following along with all this red. And here, give me a second, guys. I'm actually going to open some lights in my room. As I said, I wasn't really set up, but it is really dark in here. Awesome. So, as we're seeing right here, if we think about daily candle development, right? Power of 3. Well, we opened and went straight to a low. Now, does this have a high chance of being the low of day? Well, it's early on in the day. In terms of timing, not really, right? And as we can see on the S on the right here, it was formed afterwards. It was changed with SMT. So for me, this was not a high probability low of day, but then you have open, manipulation into a low, and then expand higher. So what is this? Well, it's just a profile of an inside day. It's a profile of a consolidation day. So I'm going to anticipate some back and forth. So the next move I'm going to anticipate is lower, and then I'm going to anticipate back higher. SMT at the low too. Yeah, we'll talk about it, but there was no SMT, at least in the 15-minute time frame right here. There was some lower time frame SMT here. How can you notice that from a 15-minute chart? Well, candle to candle. So these are lower time frame swings. So you can see the SMT. So what I'm trying to say here is at this point in time, I can frame both longs and shorts. And I don't really have a clue which one will be the retracement. But from my daily chart, I am going to prioritize trading longs because that's where I anticipate the daily candle to go, right? I'm going to anticipate a retracement of the previous very aggressive move lower. That is the main outcome. On days like those that are consolidation days, right? Just the profile, I like to use the new day opening gap quite a bit. And I like to utilize data from the new day opening gap quite a bit as well. So that's why you'll see I have my quarters and my midlines right there ready to go. And I love to use them to gain some deeper insight. So I'm going to keep that on the chart and show you guys. As per session highs and lows, as you can see, both sides of London were taken out pre-market or right at the open. So that could have been a nice short looking for London low. But personally, we had 10 a.m. news, right? I don't remember the news. Let's actually, well, no need to open it up. I can just look in the Discord. If you guys are unfamiliar, I make announcements every week. It was JOLTS. Okay, so job openings. So definitely a high impact news that I want to be waiting for after to trade. So on a day like today, definitely looking to trade after 10 a.m. Let's just bring a vertical line here. Or, you know what? It's news. Let's bring a red vertical line. Already have that set up. Red vertical line here just at the news, which means that I'm going to be waiting until after the news to trade, first of all, and second of all, I'm going to expect manipulation from the news. And did we get that? Well, we got to move lower to the new week opening gap first, forming a nice wick, but we had to move higher, which is what I will be framing as manipulation. But then we just said that based on our higher time frame chart, we want to be looking for longs, but this tells me to look for shorts. Well, that's where having an adjustable bias comes in, right? On a day like today, where power of 3 is unclear, I can either look just for longs or just for shorts. What's important is that I stick to one, because when price is choppy like this, I can very easily get caught up and just start trading randomly. And that's the truth, right? Just randomly trading. And I don't want to do that. I don't want to get stuck in that loop. So what am I going to do? Well, I'm just going to trade in one direction. Since we are reviewing price, we're going to review both directions. So opportunities to go long and opportunities to go short. But I did want to say that that's important to me. How much does Trader Tim charge for the indicator? So the indicator is a collaboration between Trader Tim and myself. And the current price, I believe, is $39.99. As for you specifically, Faraz, don't worry about that. And I'm telling you, I make money off of it. Don't buy it. Because you already have Rice Statistics and there is some things coming. I won't say more. But if you are a Rice Statistics user, you have some stuff good in the works, right? I don't want to say more. I like to just come out of nowhere and release something. But there are some things coming further for Rice Statistics than just the Rice Statistics app. All right, enough rambling about that specifically. But yes, for those of you that are unfamiliar, this is an indicator collaboration between me and Trader Tim. Very simple indicator. We have macros with adjustable things specific to his macro power 3 model. We have sessions, we have new week and new day opening gap, and we have opening prices. Inside information, always, Alex, always. But just to get back on track here, right? So you have your manipulation higher, and if I'm looking for shorts, what am I missing, right? Well, I need a breaker block. And also, something that's important to point out is I don't have SMT yet, which means I need a perfect setup, right? You're always allowed to have one thing missing for me to take a trade, but right now, what's missing is SMT. So everything else has to be present for me to have a high probability trade. Now, the first breaker block that I see formed is actually something that would be easier noticed on the lower time frames due to this move. So I'll actually remove the new day opening gap for now, just so we can have a clearer insight into this, where we see this range that was formed. So focusing on the symmetry, we see a swing high to a swing low, followed by a high, and then that low. But having that swing low be the same bar that breaks the high can be confusing for a lot of people. But mechanically speaking, this is a breaker block. And it is that simple. This is the the short that I took today. I had some very nearby objectives. I'll show you guys definitely. But this is what I was looking for. This is what I took. Now, other than that, there was another breaker block, right? The next breaker block that formed was right here. But as you guys can definitely tell, this either leads to, well, this looks like a stop loss. Let me confirm. So you have inversion fair value gap, and fair value gap. So your stop would be at the high of this inversion fair value gap to the left using the 3 PD array stop loss rule, right? Allowing for the invalidation of 3 on-side PD arrays. So that's just a loss. So I didn't want to mention it, as I always like to do. But the truth is, it's the first entry that you're looking for. Just the fact that this breaker was a little bit harder to spot. That stop loss, yes. But if we look at that correct entry here, which, am I doing this right? Yes. So this is the first time we had a retracement inside this fair value gap, which is overlapping with our breaker block. So that is your unicorn entry model right here. And here, if we want to be precise, we can also include this volume imbalance. And you have to allow for 3 PD arrays. What are those? Okay, well, I have one PD array here that is an entry. I also have a PD array on this inversion fair value gap that I could use, that I would actually use. This is not one that I could use for an entry because it is too far from my breaker block, but it is still valid at the point of my entry. So I would use this as a third PD array. But the truth is, you didn't even need to focus on that pretty much because your stop would be here either way. Now you see the stop loss, you see 135 handles. That is huge, at least for myself, right? For what I'm used to. But if we compare it to this move right here, that is a 260 handle move in, what is that, 4 minutes? In 4 minutes, then you understand the markets are volatile and it's proportional. So of course, that is what I see as my stop loss. But that is quite large, as I said. And I've said that before, but not really showcased it too much. But whenever I have a large fair value gap, and that's also why I included the volume imbalance, I like to split it in two. So for me, waiting for a better entry, seeing that we disrespect this, I can use this as my entry PD array with a slightly more reasonable stop loss, but more importantly, that offers enough risk to reward to my objective. Because if we look at the normal entry here, that is not enough risk to reward. And for me, my partial objective is that reversal range, which if we look at the premium and discount here, and we'll go on a 15-minute chart since we're looking at the price action since the start of the day, we look at a premium and discount of this. What is your partial level? Well, first of all, you could look to partial at your first discount and efficiency. But once again, that doesn't offer enough risk to reward. But you have this fair value gap with the 2 to 2.5 standard deviations. That is a great objective to look for. So that was my personal partial for today. And if you were looking at it purely mechanically, it would be this line that we're looking at right here. And even more true in this case, that it does not offer enough risk to reward. So you had to wait for a better entry. And when that better entry doesn't come, well, you miss a move. That's part of the game. But see, in this case, even using the mechanical entry, you'd be a little under what I'd like to see, right? 1.7 minimum. But just allowing for the sweep of this level, you'd have your minimum R. You could take this trade. As I said, personally, I was looking for that 2 to 2.5 standard deviations of that breaker range. That was a very clear objective for me. And as you guys can see, this is where we formed the opening range low and reversed entirely to go back to the 10 a.m. open. So definitely some very consolidation type moves, right? And you'll notice if you use standard deviations during consolidations, it's just during a ranging day, for example. I don't want to say ranging markets because I don't utilize it on the higher time frame, standard deviations of breaker blocks. But intraday, you'll see a bunch of moves that just do back and forth 2.5, 2.5, 2.5. See here, that might be 4 actually. Might be a little bit bigger. I'm just looking at the breaker block that was formed, but no, see, once again, 2 to 2.5 here, allowing for that. So we did have this trade here. But now, as I said, I also want to be considering longs for today. So how could we consider longs? Well, you're looking for a breaker block to form. Where's the first bullish breaker block to form after 10 a.m.? Right? Why after 10 a.m.? Because we have news. We have news. We wait until after the news. That is part of how I engage with the markets, right? So if we look at it right here, your first bullish breaker block to form is this level right here. And then, did we inverse this? I believe we, oh, I thought we didn't actually, looking at price live, but we did. So your valid entry would actually be entering on this candle right here. I personally would have looked for that fair value gap. As I said, I missed this today, but both entries were definitely very good. But we'll look at the valid entry, which would be entering right on the inversion fair value gap. It's a little weird here because we gap down. So see, we closed this bar right here, and then we open the next bar down there. So if you're waiting for this, waiting for price to be back within it, this would be your entry. I'm always looking at it with the perspective of my bot, pretty much. So if I tell it that, okay, well, this is a valid entry with this inversion fair value gap, well, it's entering on the open of the next bar. So always looking at it with a purely mechanical view of the charts. And 3PD array stop loss rule, right? You have inversion fair value gap, and order block, bringing your stop all the way down here. It's also important to note that at this point in time, you can see it using the indicator. Asia low has been taken out here, but it has not here. That is SMT with a key liquidity point, which is current low of day, right? So there is SMT at this point in time right here, and I'll just draw you guys a line so you can see it easier, I guess. Your partial objective has been met of the retracement lower, right? Looking for longs after SMT at this level, plus you have your beautiful setup. If we talk about time, we just close the opening range, which for me, I like to look at the first hour of trading. So what most people would call the initial balance. And we just rated that. This is perfect statistical framework to go long in this area. And as we see, right, we have some clear objectives along the way. So once again, we'll go mechanical. It is a shorter range, right? I went to the 15-minute here because we were looking at the whole day before New York. But now if we're looking at the range from this down move, I'll head to a 5-minute chart, premium and discount, and it's going to get a little bit cluttered. But if we look at this, oh, well, this order block is right here because it has a fair value gap next to it, which means we actually don't have a premium in efficiency in this case, because I don't use this order block as the opening price. I use it as the low of the candle since it has a fair value gap followed, right? And we don't have any other inefficiencies in premium. So we'd actually have to go down the time frames in this case. And I always do 5 to 1. I don't like going into the 3 minutes, the 4 minutes, the 2 minutes. That's just personal preference. So I go down to the 1 minute and I see that my first premium in efficiency is this liquidity. Well, actually, no, it is this order block. So this would be my mechanically established partial objective. And let's put it here. And if we look to that partial objective, it offers enough risk to reward. So definitely a very nice target here, offering 2.1 R. Then I would have looked for full partial here, right? Because I'm bullish. If I'm taking that long, it's because I'm bullish. I'm expecting that this move is an expansion. But once you see it reverse at the 2 to 2.5 standard deviations alongside the 10 a.m. open, that is a clear sign, if not to close your trade, then to at least go break even or take an additional partial. For me, that's always a signal to take a partial. It's slowing down, and most importantly, that's actually a concept I haven't talked about last week. I was going to say in a few weeks, but I think I talked about it quite recently. But implied dealing ranges. So from the low of my framework, which is the low I'm calling the low of my move, to my objective, which in this case would be opening range high, right? The current high of the New York session. Well, once we hit that last quarter, I expect that price will go quick. If it doesn't, then for me, that's a sign to take profits. Simple, simple rule. Moreover, if we look at one thing, we can see here, oh no, we took out that high. So the SMT was actually before. Where did I see SMT this morning? Well, I guess not, because I don't see it anymore, which means that I dreamt it. I thought I saw SMT at those highs, but I can now clearly see that both of them got taken out the same. And I'm guessing it was perhaps a little bit later. But even now looking at these, I don't see SMT. I see these equal levels here on ES, but NASDAQ took them out. So no SMT at all here. Just pure standard deviations. Opening price last quarter of the implied dealing range would be a great place to look for another partial. In worst case scenario, you took a partial and then you got stopped break even a lot later, right? And if you didn't trail to here, which I would not have done because I would have allowed for price to take out this level and then reverse, well, this would be my trailing stop. I noticed that some of you guys sometimes have questions in that regard, so I'll go a little bit in depth, but why is this where I know I would have gotten stopped out managing this trade is because I have rules for that. And when I see an expansion higher, and then it reacts off of an area of interest. So I have an opening price here where I like to use these as mitigation levels. I have my reversal range of my standard deviations. Well, first of all, this tells me I should trail my stop. I want to allow for price to retrace into a discount of this range. So if we use our premium and discount very quickly, just to showcase, I can frame that it's going to take out this liquidity into a discount and then continue. But after it has formed this swing, I want it to respect that swing. It has to. So now after we took out this level and then we close back above, right, invalidating this fair value gap, then I can trail my stop to this level. So for me, it wouldn't be a break even. It'd be a stop and profit at this area. Where are you drawing fibs from for stops? For my stops, what do you mean? For my stop loss? I don't use fibs at all for my stop loss. I use the 3PD array rule, which I showcase at the beginning of this. The only times you'll see me using fibs is to showcase standard deviations, which bring confluence for better targets for my trade. It is that simple. I look for them if they line up with targets, then I like them better. I draw them using the breaker block range. So see, in this case, I could have used the standard deviations from the breaker block we used for the entry. So I use a full range. And I can use the bigger breaker, which I like to do. So this is the breaker that formed from the manipulation of the opening range low. This is just a breaker that from experience I know will be more important. But even if I draw all of them, I can see reversal range here with 4 standard deviations. That is a very high probability objective. Truth is, if I don't have clear objectives, I'll use purely standard deviations from the most recent leg. So most recent leg is the one I'm using for my breaker block, right? So it's going to be this one. And then I'm going to see that New York Open is going to be a high probability objective. And then 4 standard deviations would be a great target. But truth is, I had clear objectives here because I had a premium in efficiency. And then I can use as confluence those standard deviations with the rejection of the 10 a.m. Open to find a high probability objective past that. But the truth is, in a scenario like this, if you're going long and you're bullish here, your real target is going to be this high. So we're just talking about the specifics of managing the trade, knowing now that it didn't reach your full target. But this is where I would have gotten stopped out because I would have been expecting for us to go all the way to our target. Always a pleasure. And then if you were short, I'm going to say the same thing I always say. Why would you look for continuation here, trading into lunch, where you already had a successful trade? You don't need anything more. I also do want to share that while you were in this trade, you did get SMT here. And if for my macro lovers, where did we reverse? Once again, 1050 to 1110. This must be the highest probability framework I know. I'm going to be honest here. Right, probably right after London is looking for retracement, which is opposite of the current direction of New York during 1050 and 1110. This is super high probability. The only time I see it fail is during trending days. Outside of trending days, almost no matter what you do, you'll get a retracement here. Won't always be a retracement as huge as this, but you get a retracement here. And if you look at that first premium and efficiency of the current New York range, beautiful. Beautiful, beautiful, beautiful. A lot of sauce shared here. Yeah, I took that trade today and quit afterwards. Nice, easy day. Thanks through Rise. Appreciate it. I'm glad we can be of service, brother. Love to hear it. So definitely, look, nice long, a little bit of a tougher short, but even if you looked at the initial entry, worst case scenario, we're looking at a break-even trade, right? Where you had barely any drawdown. Well, I mean, half drawdown, which is actually quite sizable. And then it ran towards your objectives, but you couldn't take profits. So you just got broken even there, right? Worst case scenario, that shorts a break even. And then you could look for more opportunities later down the line. Like first thing I see is I see a bearish breaker form right here. So you'd look for an entry right after. And as soon as we retrace into here, that's an entry. And then 3PD array stop loss rule, you have fair value gap, inversion fair value gap, but you actually have that last fair value gap, which is quicker. And you have a very nice trade that would have given you plenty, right? Even just looking at the current daily low, which is the low of the AM session, very pretty, very beautiful, right? And let's actually bring that guy in, AM session low. Get in here. So very beautiful trade here, but I don't trade into lunch. I don't trade after 11:30. And truth is, I should have made money here if my bias was short, which this is what I traded today. So I'm not going to talk about every single possible setup because I have parameters that are fixed on consistency. And for me, that means that I'm not trading during lunch. If you want to fix on the return, have the most amount of returns per day, I've already shared rules. You can find my model video on YouTube, right? It's pinned to my channel, which you can find in official links. And you'll note that I shared 2 different ways to trade this model. But I trade the conservative approach, which means I am not trading during lunch. Now, you did have a nice lunch trade that we can discuss, right? Your objective has been met during lunch, which means that you can use the noon to 1 range. If we look at the low at that point, you clearly have a lunch trade, which means very, very nice objective at lunch highs, which would be this noon. So lunch highs right here. So you have a very nice lunch trade. And if you're looking for a breaker block after 11:30, right, this is where you start trading. Well, a breaker block was formed just at 1:30. I was going to say 11:30, just as 1:30. And where's your overlapping PD array? Well, I have an inversion fair value gap right here. I don't need to think further than this. I have a framework, lunch framework, backed by statistics. I know this works, right? We take out the low of lunch, then my target is the high of lunch. Okay, then I wait for my unicorn entry. Once again, mechanically established, right? There is no discretion in this. 3PD array stop loss rule. I have inversion fair value gap, order block. Put it at the swing low since the order block is part of the swing. But even if you put it there, still would have won. Did want to showcase this. And then standard deviations for key objectives, but you have an opposing range, right? So what's going to be your main objective? Once again, 5-minute chart, premium and discount of the latest expansion range. Now, since my target is going to be within this range, I would refer to the bigger range right here. But let's say you just refer to that one, right? First, premium and efficiency. As I like to say, guys, always pessimistic here, right? So you would have had a bigger target, better result on this one. This is the one I would have used because of simple logic that lunch high is within that range. But let's go at it from a pessimistic approach. First, premium and efficiency. I mean, I think I'm hide. Yeah, no, that was wrong because I'm actually hiding it with my standard deviations. Let me just remove them. You'll see we actually have a swing high before. So I almost missed that. 2 to 2.5 here aligns beautifully with it. That is a great partial objective. We look right here. Did it offer enough risk to reward? Very nice. It did. 3R perfectly, along with the confluence from the reversal zone of my standard deviations. Partial objective, I'm break even after. My target is lunch highs. And of course, you can always leave runners here since our target was bullish. You have a lot of liquidity left to go target. And as you guys see, we went all the way to the opening range high afterwards. So definitely a very beautiful trade there. On consolidation days, the PM session is very, very nice. Very nice. No worries, Fleech. No worries. Very glad you came here. Very glad you came to us. And hope to see you again soon. So as you guys can see, very successful frameworks as always. So what did we look? We saw a loss here. I believe it was it a long or short that would have led to a loss? It's the late short. So first of all, if you took the late short because you missed the first one, well, you didn't spot the first breaker. I mean, even then, I always tell people basically to take the first entry that it provides, and that would be here. So that's just a straight up loss. Let's just call that a loss. So you would have had one loss short followed by a small win slash break even. And if your bias was long, as was mine, even though I traded the short, after a large range down day, you expect a retracement higher. Well, you would have had one small win in the AM followed by a big win in the PM. Once again, just looking at mechanical rule set, you would have had a very, very nice day. If we look right here, even additional confluence, there's the SMT from our big level, right? So we can see it on ES where we took out that level, which is our daily swing point, and we did that on NASDAQ, which just leads to an even prettier trade at this point. Breakers is too low. Yeah, not enough trades. Not good enough. Well, as you can see, a lot of opportunities, a lot of return. I'm not going to comment on that last part for us. You know, I don't want to. Do we have any questions, right? On a day like this, definitely a day packed with opportunity, even though this is what I would frame as a shitty day, right? What did we do? Just look at it from the open. We went up, we opened, went lower, then we went higher, then we went a bit lower, a bit higher, lower, higher, lower, to finally go higher. This is shit. You had SMT here, you had SMT already at the low of day, and then you have further SMT here, which is based on the daily level. I'm not going to go all the way back. It's a shitty day, but still filled with opportunity. And when you have a model that you have a very, very easy rule set approach, rule-based approach, it's easy to navigate those days because I'm only looking for a setup to form. I'm not looking for 20,000 different things. I'm looking, is my setup there? Yes. Is it good enough? Does it check my boxes? Yes, then I trade it. Any luck on the indicator that copies drawings? What do you mean by this? What drawings? No. An indicator that copies drawings. Chart to chart. You want to know how to copy drawings chart to chart? Is there something that can tell you in advance if it's going to be accumulation day? Yes, Alex. The range of the previous day. No, but I just use this to sync drawings from chart to chart. So just basically those options, and you can mess around with it. It can sync them in layout, sync them in things. But no, I don't know for us. Maybe you're saying something based on something I said recently. Not gonna lie, since I've been sick, I have no recollection of the last week too much. But what I do know is that indicators don't have access to the user's drawings. So that's not something we can do. Maybe you're confused, maybe I'm confused. We're confused. We won't know who's confused. All right? It's a whole vicious circle. So no worries there. But yes, Alex, previous day's range. You want to know if today's going to be choppy, then look at the previous day. And if let's just do a little study, right? Because all that data is available in Rise Statistics. So if you want to see it, then you can see it. But let's look at all our large range days. Okay, well, in this case, this large range day didn't have a choppy day after. And again, not after. But look at the dates. Friday, this is Friday, February, right? They're all explained. We all have PA reviews on them. But then let's look at other large range days, right? This is 2%, this is 1%. Okay. 4.63%. The next day, we gapped and then went extremely higher. Okay. Let's look at this. Here we have almost a 4% day. Same thing. Here, we have almost, once again, almost a 4% day. The next day, same thing. We retraced. Here, is that, well, 3.12? Okay, we can call that a large range day. This one didn't work. This one, it did work. Because if you look at this range right here, and let me remove those. If you look at this range, the next day opened, went all the way lower, but had that whole move retraced all the way to a high. So that's opportunities to go long still. And then we can look at today, which it definitely worked. And we can keep going further back. Large range day, choppy day with opportunity for upside retracement. I'm looking at just visually, right? This is a large range day, small range day. Large range day, pretty large range day, but once again, opportunity for retracement higher. To the upside, here, it would not have worked, but after this one, we did. So I see probably 2-3 instances where it doesn't work when I see 10 where it works. You figure out the statistics of that. Or if you don't want to, go on Rise Statistics. You'll find all of them. Pleasure, Alex. But this is very clear. Whenever I see a very large range day, I'm, of course, always framing with news, but I'm oftentimes just looking for a retracement in the other direction. It's worth the dough. Well said, Faraz. Well said. Are you anticipating 9.6 low being taken? So this low. We don't need to, right? We have SMT at this level. Truth is, if we are going to have a reversal this week, it's going to be with CPI. Definitely. And as you guys remember, if you were there during the monthly outlook, we're definitely looking for some sort of mid-March reversal. That would be best case scenario. So do we have to take this? No. Would I like to see this taken? Yeah. I'd like us for NASDAQ to take it while ES takes out this low right here, and we could form some form of SMT. Honestly, that would be like what I would love to see tomorrow morning, and then see CPI just run the fuck higher. So this overnight movement going for this, CPI just runs higher aggressively, and I can trade longs to a new week opening gap, for example. If I just bring this guy in right here, this would be best case scenario. Right now it's a little too zoomed in for me to have my quarters. Too zoomed out, I mean. It's a little ugly. Let's actually remove the midline too. Maybe I should add something that says if you're on a higher time frame, you can't have the midline and see. Who knows? But this is what I'm looking for right now, honestly. Form SMT here, go back to this high, best case scenario. But as you always know, Faraz, you take the setups that are provided. CPI feels like a mean reversion for sure. I'm glad to hear you on the same page as I am. That's awesome. I'm going to pass my challenge and joining right after. Don't put pressure on yourself, Alex. Take your time. All right, take your time. You can support my products. You can not. I don't see you not paying for it, not supporting it. It has no issue. If it provides value to you, then you should have it. If it doesn't, then don't pay for it just because some guy on the internet is telling you, oh, this is so cool. I love the product. I love what I did. And I love using it. But I'm not going to start enticing people in my free calls to go buy my paid product just because I want them to and because you should buy it since it's Ollie's product, you know? But definitely I'm bringing a lot of more value to it so it can benefit a lot wider of a range of people, right? Not just traders, not just analysts. I want to, well, yes, traders, but not just analysts, not just statistical traders. I want to bring value to all traders. So that's coming soon. On that note, guys, I haven't eaten yet, and we've been at it for 40 minutes. So we're going to call it a night. Thank you all for being here in numbers, as always. And we'll see each other tomorrow for another PA review. If I can make money, I'm ready to join it. Always. Jokes aside, with a few things that I see from the recap, it looks pretty good. Awesome. Well, I'm going to be sharing a lot more things publicly about it, so you'll get some nice views of it. Always. You guys have a great night. We'll see each other tomorrow. Bye, guys.